What is a Bitcoin ETF? A Bitcoin ETF, or exchange-traded fund, is an investment vehicle that allows people to gain exposure to the price movements of Bitcoin without having to directly buy and hold the cryptocurrency themselves. Instead of navigating crypto exchanges, setting up a digital wallet, or managing private keys, investors can buy shares of the Bitcoin ETF through a traditional brokerage account, just like they would other stocks and ETFs. This makes investing in Bitcoin more acceptable and familiar for a broader range of investors, including institutional investors and individuals who are more comfortable with traditional financial products. Types of Bitcoin ETFs. There are two primary types of Bitcoin ETFs, and it's important to understand the differences. Spot Bitcoin ETF. A spot Bitcoin ETF directly holds the actual Bitcoin as its underlying asset. When you buy a share of this ETF, you are essentially buying a piece of a fund that holds a real Bitcoin in secure custody. The goal of a spot Bitcoin ETF is to track the real-time spot price of Bitcoin as closely as possible. This is often considered the most straightforward way to invest in Bitcoin through an ETF. Bitcoin Futures ETF. A Bitcoin Futures ETF does not hold any actual Bitcoin. Instead, it invests in Bitcoin futures contracts. A futures contract is an agreement to buy or sell an asset at a predetermined price on a future date. The fund managers purchase and roll over these contracts to maintain exposure to Bitcoin's price. Because these ETFs are based on contracts that speculate on the future price of Bitcoin, their performance can sometimes deviate from the current market price of Bitcoin. Key advantages of Bitcoin ETFs: convenience and accessibility. They simplify the process of investing in Bitcoin by using a traditional brokerage account, eliminating the need to set up and manage a crypto wallet. Regulatory oversight. Bitcoin ETFs that trade on regulated stock exchanges are subject to more regulatory oversight than many cryptocurrency exchanges. This can provide investors with a greater sense of security and transparency. Ease of management. Investors don't have to worry about the security risks and technical complexities of storing Bitcoin themselves, such as safeguarding private keys or protecting against hacks. Potential disadvantages and risks. Fees. Like all ETFs, Bitcoin ETFs charge management fees, expense ratios, to cover the cost of operating the fund, which can reduce your returns over time. Tracking errors. While the goal is to track the price of Bitcoin, there can be a slight discrepancy between the ETF's price and the actual price of Bitcoin, particularly with futures-based ETFs. Volatility. Investing in a Bitcoin ETF still exposes you to the extreme price volatility of the cryptocurrency market. The value of your investment can rise and fall significantly. To learn more about our legal practice with respect to financing and investments, including optimizing Bitcoin and other cryptocurrencies, visit our website. We also welcome you to subscribe to our channel. Thank you.